Now we're still talking energy markets, and the price of Brent crude rose marginally above $50 a barrel in early trade today as China, the world's #2 economy and oil consumer, recorded an 8.3% drop in July, in its biggest fall in 4 months. Let's bring in Ada Akunubi, research analyst with Financial Derivatives Company, as we take a look at the commodities market, a deeper look rather, at the commodities market. Good morning to you, Ada. Thank you so much for coming through.
Good morning, Harriet.
So let's start from the oil and gas matters. Oil prices are marginally above $50 a barrel. It's been fluctuating between 49 and 50, hasn't even neared $51 per barrel in the last couple of trading sessions. And we know that China posted more than disappointing results in July. And so how much longer are we going to see oil prices remain like that?
Okay, so last week we saw that oil prices literally went below $50, the resistant barrel. However, yesterday, Monday, oil prices started picking up gradually as figures from the China's crude imports came in, and it was 4.3% higher than most analysts expected. But now prices again are dropping today as the Central Bank of China just released a statement that they're going to devalue the yen nearly 2%. And weaker against the dollar. So we expect oil prices to keep dropping because we know that China is the second largest consumer of oil, and in fact the second largest economy in the world. And bear in mind that we still have the problem of oversupply. The market is still oversupplied with U.S. shale producers still very resilient. Despite lower prices, they're still increasing their oil rigs, as at last week increased 6%. And their production for this year was 9.5 million barrels per day, higher than 8.7 million barrels per day as at 2014. And as well, you have OPEC
yes,
producers.
I was just going to mention that OPEC has continued to exceed its quota of 30 million barrels per day.
Yeah, OPEC producers, Saudi Arabia specifically and Iraq, they are not looking to cut down production, and they're still bent on producing more to fight for market share. So there's a war between the Saudi Arabian producers and the American producers. They're looking for who is going to produce the most to capture more buyers.
But who are the buyers? Because if we have oversupply in the market, who's actually going to be buying? There's some analysts have actually, argued that there really isn't any oversupply in the market.
Well, we believe that there's oversupply in the market. However, we believe that in 2016, global demand might pick up because most economies might perform better. So in looking forward, the oversupply that we are currently experiencing might reduce a little bit as more emerging economies and China as well might be a stronger economy in 2016.
That's not too good for our own market, is it?
Yes, it's not.
It's not too good. So we're going to keep our fingers crossed on that one and hope that oil prices bottom out very quickly. But let's talk about the commodities, the agri-commodities now. And we noticed that grain prices reached a 2-week high, in the last couple of, in fact, from yesterday, as this morning, it was a little on the high side. What's actually contributing to this? Why are we seeing, grains coming up? One would expect that once the rainy seasons begin to, taper out, things will get better.
Generally, there's been the discussion of the El Nino. So the El Nino the El Nino effect affects weathers in growing regions. For example, grain prices are going up again because of droughts in South America and Southeast Europe. As well, the USD forecast that will be probably coming out tomorrow is expected to reduce the output for 2014-2015 because of early wet weathers that was encountered in the Midwest region. So these are putting pressure on grain prices.
But we still see corn looking good. The year-to-date is although 0.38%, but the weekly change is still in a positive of 4.40%. Even wheat is also looking good, not looking too bad at all at $5.22 a bushel.
Yes. So generally, grain prices are determined by weather conditions in major grain regions. So if weather improves, it will push out more crop yields, and which will weigh down on prices, making it more affordable. And we have a sugar as well. The sugar prices are going down the lowest in months because there's an oversupply in India. So India currently has 4 million tons of surplus sugar in the economy, and they're looking for ways to push out these exports to the global market. The global demand for sugar was, in fact, lower than supply. Global supply was 28 metric tons, but global demand was 24. So there's a 4 million surplus, and they are in talks with governments, Canadian government, and some African countries to see if they can barter this product so as to, get more money. So there's surplus sugar as well as palm oil as well. We see Malaysia has recorded the highest production in palm oil in years, and the stockpiles is 5.3% higher than last year, and output as well is 2.3%. So there's currently rising stockpiles in Malaysia, which is the second largest producer of palm oil, and this is looking to drag on for 2 months. So the sugar market and the oil palm market is oversupplied, and prices will be lower for a long period.
And that's good for the FMCG.
Yes, it is good for the FMCGs that import sugar.
But then it's not too good for them because we see a shortage of cocoa beans, and FDC is actually predicting stronger demand for chocolate will increase prices in the coming months. So for those of us, me included, who have sweet tooths, we really need to cut down on chocolate eating.
Yes. Chocolate, the demand for cocoa, it's been a persistent problem because of the lack of supply shortage from major African producers, West Africa, for example, Ghana and Ivory Coast. So this has been going on for a very long while. We have aging trees, we have late application of fertilizers, we have their workers as well migrating to other areas. So the cocoa market is it's suffering in major West African countries. Until this improves, we don't really see any pickup in cocoa prices.
And so Nigerians should also begin to look at, going back to the cocoa farms, because once upon a time we had a lot of cocoa farms and plantations. So what's your outlook now for the market for the rest of the week, at least until Thursday when I have you back here in the studio?
Okay, we expect oil prices to drop further as the week goes by, mainly because of the result of the Central Bank of China devaluing its currency, and investors worry that the demand for oil from China will weaken. So we expect oil prices to drop, and as well the oversupply in the economy. So oil prices will continue to drop further until things change.
Okay, and then with regards oil allocation, of course, we've got SAFAC allocation that will soon be dispersed. How much do you think the oil price is going to affect allocation?
Looking forward, we expect the FAC allocation for the coming months might be lower, back to about 410 billion naira, mainly because of the, as we see, oil prices have been decline in 2 months, and most of this FAC allocation are 90 days arrears. So looking forward, we expect FAC allocation to be lower, and this will have a negative impact on our reserves. It have a negative impact on our exchange rate, and as well, more states might start owing salaries. So until we have, and we know that Nigeria is 70% dependent on crude export, and 90% of our external reserves depend on crude exports as well. So if certain strategic decisions are not made, we might continue to suffer from this global decline in oil prices.
Well, Ada, thank you so much for coming on the program and sharing your perspectives with us. Hope to see you on Thursday.
Thank you.
Ada Konobi is a research analyst with the financial derivatives company